Okay, it's 28th of August, currently 7:44 a.m. GMT, and I was just looking at this Australian dollar, and I'm currently long in Australian dollar on the swing basis to try it and run us back into at least this area at 66.500 and possibly through those highs. So I'm going to be discussing why I'm looking for Australian dollar to move up and overall US dollar bearishness so in the coming weeks and months. So this is the research report from ING in here, and these are some bullet points that I have marked, I think, which are important. So I think yeah, so they basically disagree with the market expectation that they've seen, and the market have seen the peak in Australian dollar rates, interest rates, and they at least expect another hike in coming month. So this is some of the detailing as to why they are looking at that, and the first point they point out is the Australian GDP projections. So the argument is that according to them, the Australian economy remains robust, and they dig into the inflation data and see some measures. So first measure being that the unemployment rate is at historical levels, is at all-time low, historical lows in here. So that's the first point, and some of the inflation numbers, and then wages and unemployment data. So also, yeah, the second point is that the residential housing markets, which is the interest rate sensitive, is holding quite well. So in other words, like the interest rate goes up, the housing markets are not correcting as they expected to. So and also they suggest that it's strengthening in some locations. So that's another reason that interest rates should remain high, and high risk of inflation bumps. So they are saying that there could be still inflation upticks due to the following reasons. So high month-on-month rates of growth in the first 6 months of last year. Okay, so this is some of the reasoning, and you can read. So they are saying that the inflation run rate has not dropped very much, and yeah, this is the main point. So so according to them, it's a very good chance that the annual inflation rate will begin to move higher again and not lower, which the central bank projections suggest. So that's quite a big divergence as to what they are looking at and the Australian central bank is looking at. So these are the main reasons, but I think this reason, according to me, it makes the best sense in relation to what I'm looking at right now. So they're saying that in the G10 currencies, Australian dollar is the most risk sensitive currency. So in other words, if the equities markets rally, then the Aussie rallies as well. So the most correlated risk currency with the equities, with the risk sensitive sentiment, is the Canadian dollar as seen in here, and the second one is the Australian dollar. So if the equities markets rally, and the Aussie rally is the best as well. So, and we know that historically September month is pretty good for equity markets. So the equity markets rally in the September month. So so that, I think, that could yield a great return on the trade as well. This is from the report that I'm looking at, and also one more thing I would like to point out is the FX seasonality. So this is the average change in each market every month of the last 20 years, and you can see in the Australian dollar, you can see the August month is pretty bearish for Australian dollar, and then followed by September, which is a very positive month for Australian dollar. So this is what I'm looking at, and currently it's 28th of August. So I think we have already played out this bearishness, given that Australian dollar is down 4% in this current month. So I think we certainly have some room for recovery in here that we can capitalize on. So So that was a little bit of fundamental reasoning in here, and just going to discuss some technical reasons in here. So you can see this very thin move up was picking up some liquidity from this particular area right in here, which was feeding the move of this area. So in other words, this is a liquidity that is pushing the current moves down in here. So it's a potential that we can reach 6900, call it 69,500 in the coming months. That's quite possible. So I'm looking at that, and overall we can also reach into this apex at 70. So call it 700 figures. So as far as the current price action goes right now, I think we can still make another run to the downside. I think it's very likely, and I would like to see that, because that would be a fresher pickup of liquidity in terms of what this guy is picking up. So fresher in terms from, so this is the move which is carrying this whole move up, and we have been feeding for some months in here, and to me this has cleaned up the momentum in here, and we went back up and we came into this little fractal night in here, which is a newer pickup. But I think this price action, so it's on a short time frame, so I'm thinking that this price action is very dealt off right now, and given how this move has come a little bit deeper into this fractal, I'm not quite sure if I do want to see the price hold in here. So I'm still long. I took a long on Friday right in here. The stop right in here as marked in here, and we did get a nice 30 pip rally in here, but certainly it's an Asian run, it can give back very easily. And today UK is closed, so I think we won't see much of the volume in FX markets today. So we can see some range bound action in here, but what I'm looking at right now on the shorter time frame is if it does come into this area and starts to hold in here, because this is a nice liquidity, and if it starts to hold in here, show some shifts, I think a swing trade can be taken to at least run us into this area, and we'll see how this plays out in the overall picture. If not, I'm long, and if it decides to run straight to the level, I think this is a very high probability long in here. I would like to take some longs in here. I already have limits in here, and also we have tomorrow we have RBA governor designate blocks speak. So I think this can generate a fair bit of volatility tomorrow, and also on Wednesday we have CPI. So I think we'll be seeing some material moves in here. So I think if there's no downside surprise in the inflation for Australia, I think we can see nice rally in the Australian dollar. So that's what I'm looking at right now. So as far as current it stands, if it holds in here, okay, that's fine, but I would really want to see a run, very thin run. Might be when the governor speaks tomorrow, the designated governor speaks tomorrow, or during the Australian CPI. I want to see a shot right into this area, then that can be swing back up into some of these structures. And if the price currently holds in here, or if I take a long here, or even if I take a long in here, I want to scale something out into this area, because I think the way this is formed it can reverse the price. So I want to be taking some position out and adding back in. So I'm going to share that with here. So as to how I position myself for looking for higher prices overall in the Australian dollar, and let's see how this one will play out. So also discussing some of so this is the dollar, I think. So I think this is called the line in the sand right in here. So I think if it does break, and given how this all has been traded, I think we can see some lower levels overall. And given, I think most of the economists are looking at US dollar bearishness in the coming months, specifically the fourth quarter of this year. So I think this can pair out very well. So I think according to what I said, like in Australian dollar, I still want to see a run down in here. So similarly in US dollar, I think I want to see a run into this 104 area. I think we can still make our way into this 105 area. but I think that will be an extension, a little bit of an extended move, I think. So let's see how this one will play out. So I want this, if it's bullish, I want to see this low hold, and going on the pound. So you can see this is the structure that has to maintain. It's currently maintaining in here. So I think pound can also be along if it comes down in here. Not a swing. I think it can be taken on a swing basis, but I'll certainly be managing it intraday wise in here. So that's what I'm looking at right now on the intraday basis in pound. But yeah, so this video is more based on Australian dollar, so that's why I'm looking at taking a long in some Australian dollar. Let's see if I can add some video and some entries in this area if I get some, and I'll most likely be recording if price comes down to this area. I think this is a very high probability long for me. Certainly risk something in here. So let's see how this one will play out in the overall picture.